The groceries get more expensive, the gasoline gets more expensive, but their lifestyle stays the same. What's up, everyone? Kevin Amol's Pine Financial Group, where we work together so you succeed. Hey, you found us here on YouTube, maybe at Facebook or Instagram. Please help us out. Hit like, hit subscribe, and leave me some comments. We're trying to build a following or a channel to help more real estate investors just like you. I hope this video does just that. I want to talk about the current economy and the clear K-shaped economy that we're in. So what is it, what caused it, and what do we do to benefit from it? Okay, so if you don't know, a K-shape, if you think about it, one going up, one going down, the K-shape economy is a true separation of wealth. So the wealthy get wealthier, the poor get poorer in its most general terms. So it's just separating, basically eliminating the middle class. And over time, if everything just stayed consistent, as we're seeing right now, that's exactly what would happen. So this is no good. But look, we're in real estate investors, we're passive investors. We don't have control over the separation. We can only understand it the best that we can and benefit from it. So we want to definitely be on the up shape piece of the K-shape economy. So how do we get there if we're not there right now? But first, let's talk about what created this economy that we're in right now. So stay with me here. I'm dying to know. Let me know what you think if I'm totally off base here. This is just my personal opinion, what I think of why this was created. So it started with COVID. It might have actually started prior to, but was accelerated. COVID definitely threw some gasoline on the fire. But during COVID, when there were people that were told they were not allowed to go to work, we can't just do that. People have to feed their families, right? So what does the government do? Say, you're not allowed to work. So instead, we're going to give you free money and so that you could support your family. So there was just this gigantic money printing going on, lots of stimulus, businesses, individuals, everybody was just getting free money. And when you have a ramp up of the money supply like that, that creates inflation. So we get into a position, a lot of families, like let's just take a single family, for example. Maybe it's Mr. and Mrs. Jones and their kids. So we all like to keep up with the Joneses, so we might as well use those as an example. So Mr. and Mrs. Jones live down the street. They have a couple of kids and they have a nice lifestyle, right? But they're living paycheck to paycheck. Their budget is exactly how much they're making. So as we see inflation ramp up, which is caused by the money printing we saw in COVID, inflation goes up. It went up to over 9% in 2022. So that impacts that specific family. The Joneses live paycheck to paycheck. Okay, so they have this lifestyle. They're going out to dinner, they're doing this, they're doing that, they're buying their new cars, all of those things, right? But then when you have inflation going up, the groceries get more expensive, the gasoline gets more expensive, but their lifestyle stays the same. So instead of cutting back on the trips and the entertainment, they keep everything the same, and then their groceries and everything really goes up and costs more. So instead of changing their habits, what happens is they start putting it on credit cards. And now here we are 3 years later, and inflation is more under control, but we have this credit card debt to deal with. And it's not just the credit card debt, y'all. The way you fight inflation is to reduce money supply and increase the cost of the money, the increase interest rates. So we saw that ramp up in the short-term interest rates, which puts pressure on anyone that wants to borrow money, right? So now we have borrowed money from credit cards at a much higher interest rate, making it more and more difficult to keep up with the payments. And that's where you're starting to see the separation. Now, on the other side of the curve, you have real estate investors and other investors and people that understand budgeting. And if my groceries go up, I got to cut back over here. I know it sounds crazy, but that seems to be a hard thing for people to understand. So the ones that do understand that continue to acquire assets, 401ks, rental properties, stock portfolios, well, all of those benefit from inflation. So we have the higher net worth families, higher middle class, wealthy, with assets going up in value. So they benefit from the inflation while the rest of the population get hurt by inflation. That's why inflation is so terrible. It's the most fair tax, in my opinion, because everyone pays the same amount. But what it does do is create the separation. So when the government goes out and prints money and starts giving it away, they think they're helping the lower middle class and the lower income. And they are in that specific scenario. But over time, that process hurts that group. And that's what we're seeing right now. So that's the K-shaped economy. So now I described what it is, how we got here. Now, what do we do about it? Well, we have to get ourselves into that asset appreciation side. We have to stay within our budgets. So we need excess cash flow to buy assets to get on that upper echelon of the K. If we're in a position where we don't have the money to buy assets right now, I really believe this. I know it's not a big popular topic, but I really think we got to get into a budget where we have excess cash each month that we could start stocking away into assets. With that said, there are a few ways you could use real estate to acquire those assets with very little or no money down. So I'm going to give you 2 examples of how you can get on the upper part of that K-shaped economy and you could be on the winning side. I know this all sounds terrible, but I'm just trying to be real with y'all here. So how do we get on that side of the K-shaped economy? If you want to use real estate, or if you have an interest in using real estate, here's 2 ways to do it. Number 1, you could go get your real estate license. And if you're really good at finding projects, maybe you don't have the money to do the project yourself or buy the rental property yourself, but you could find those deals and get a commission by selling them to another real estate investor that you meet at a networking group. So there's a little bit of cost involved here and a little bit of time involved to go out and get your license, but it's actually a rather easy way to get some extra income that you can then plow into other properties. And if you're interested in real estate and you're out there looking at real estate and making offers and doing those things anyway, you might as well find a way to monetize that and get paid to do it. So one way to do it is to go out and get your license and start earning commission income. I'm not saying replace your current income with this. This is in addition, and then you could use that money to stock away into assets that appreciate, that can keep up with inflation. Number 2, you could partner with people. So if you're out there in the real estate community, you're at the events, you're going to seminars and conferences and meetups and that sort of thing, and you're meeting people, well, maybe you're out there looking for properties too. If you find a property and you don't have the money to do it, maybe you want to come to Pine Financial. We do a lot of hard money lending and lending on fix and flips, but we want you to have a little bit of liquidity, a little bit of reserves in case there's a problem. So if you don't qualify, maybe you partner with somebody or you sell them the project, but instead of just selling it to them like a wholesale transaction and getting a fee, just like you would with a commission, maybe you decide to say, hey, I don't want a wholesale fee. I want 10% of the deal or 15% of the deal. And if they're going to flip it, you get a little payday. If they're going to hold it as a rental, now you have some appreciating assets, and there's no money involved in that. It's just finding a deal and finding a partner and injecting yourself into that deal as equity. So those are 2 ways that you could use real estate with no money or very little money and generate some income to get yourself on that upper part of the K-shaped economy, which we're seeing right now. I hope you find this video helpful. Let me know, what is your interpretation of a K-shaped economy? Are we even in that economy right now? Let me know in the comments below. Hit like, hit subscribe. We love you. Check us out, pinefinancialgroup.com.